African Bank is back in the black. The group has reported a net profit after tax for the half year of 203 million rand. That's from a loss of 43 million rand a year ago. The firm has benefited from a 38% jump in the customer numbers that, along with more product offerings, has allowed for more diversified business with multiple revenue streams. And joining us with greater perspective on that performance is company CFO Anbann Chetti. Anbann, an absolute pleasure and a good afternoon to you.
Thank you so much. Yes, thank you so much, Noel. It's great to chat again.
Brilliant. But let's start off by just talking about the swing back into the black here and how that has, the team at African Bank are feeling today.
Yeah, definitely. Thank you so much. I think it's really been a great half of the year. We've shown steady financial performance, making 203 million profit after tax. And really what's led that is that we got a growing customer franchise being over 5.7 million. We've seen a significant reduction in our impairments as we've managed our credit risk management. What we've done, really done well on that, 900 million in those impairment charges year on year, as well as our growth in our non-interest revenue. That's really key. As we've grown our customer franchises, we've got more clients who are effectively making African Bank their primary bank. They are tapping, they're swiping, they're making payments, they're living their financial lives with African Bank by their side. That's really helping that non-interest revenue grow. As well as we're building a very much diversified balance sheet, getting more into secured lending. Almost just under 40% of our balance sheet is in secured lending, as well as we've got a strong surplus liquidity of just under 8 billion, strong capital ratios of 32.5%, and that really primes us up for the growth initiatives that we have coming up in our pipeline.
What I also found to be very impressive about this is actually the decline in interest income there, because what it does tell us is that when many of your competitors are really getting their incomes from this endowment effect, you've looked elsewhere here. I'm very keen to find out about how you did manage that, and if you did become more strict with how you, granted a credit, and then how the consumer has then fared as a result.
Yeah, no, definitely. Well spotted on that. I think what we've done, and it's very different to some of our competitors, is that we pay interest rate to our clients from the first rand that's in their bank account. So we firstly pay up on that, which is really a competitive and a market leading edge. Secondly, as we diversified into more secured lending, the net interest margins are a bit more tighter and compressed. So as that balance sheet moves from secured into unsecured lending, it's deliberate. So we're not surprised by having our net interest margin at 10.2% down from about 11 a year ago. That's deliberate. And we will see to expect that NII margin would continue to drop in coming reporting periods, and that's deliberate as we move more into secured as well.
Speaking about secured lending and the pilot to home loans, let's talk about that and the prospects for this part of African Bank.
Yes, it's very exciting. We've basically launched to our staff to get into home loans, and I think it's really exciting. Our philosophy is, before we get into the market, we want to make sure that our staff members are effectively our pilot. They tell us what's working, what's not. So when we do get into the market, we deliver a product that is great on customer experience. That's something we pride ourselves on, to try to take away as much friction out of our processes and putting the customer first. We really believe and pride ourselves that will be the difference of African Bank, in that lots of our competitors most probably have similar strategies, but execution will make the difference. And we focused on customer.
And then, of course, we know there were some acquisitions that have been made recently. Let's talk about Grindrod and that integration, and Sasfin, where we are in terms of that integration as well.
Perfect, yeah. So Grindrod was acquired a few years ago. We're pleased to say that we've in the process of effectively implementing a Section 54. What that means is Grindrod Bank will not have a banking license, but rather will become part of our business banking division. We expect that to happen in coming months. That's really exciting to get that done. I think we'll create a lot of efficiencies within the bank as well. And then secondly, on the Sasfin capital equipment finance and the commercial property finance, that's expected to bring in about 3 billion rand onto our balance sheet. So that's additional diversifying our balance sheet. Really excited on that. Where we are on that is still in awaiting the final regulatory approvals. And we also expect that to close out potentially within our second half of the year as well. So really exciting times on Grindrod and on Sasfin as well.
Also, Anbann, we know that diversification and scaling are at the helm of your strategy at present. Is that now going to be organic moving forward, or are you still on the lookout for some acquisitions if, of course, they fit into where you're trying to go?
I think it's going to be a bit of both. As we look at it, I think we've got audacious plans to grow the bank, and we currently have a 50 billion rand balance sheet, and we aim to really significantly grow that. So I think there's definitely going to be organic and some acquisitions that meet our strategic objectives, and then we'll definitely pride ourselves in looking at that.
What is also interesting, I think you've mentioned here really is consumers moving over and making African Bank their primary bank. Client acquisition in the banking sector is not easy. In fact, there's so many new entrants that it is looking like a very competitive space. I'm keen just to get some insights onto that, Anbann. What do you think it is about African Bank that is moving consumers along with their salaries and all their debit orders?
We are doing lots of things. I think firstly, it's our brand presence. We're spending a lot of time on improving the brand. We've got a new brand ambassador. We're doing a lot of, we go out into the communities, we serve a lot, we help people. And I think all those positive aspects of what we're doing is the nuggets that we're getting in, as well as we're investing a lot in terms of our app to make sure we have the client frictionless experience. As well, what we spend a lot of time, we pride ourselves is good service. We've got just under 450 branch network across the country. It's key that our customers are serviced on that platform. We've got the bank, effectively your app is your bank in the pocket. We've got that. We've also got our call center. And our philosophy is really one of putting the client first, but ensuring that clients can meet us where they are comfortable. If they want to come to a branch, we are there. If they want to be totally digital savvy and only use the app, we are there. If they feel more better speaking to someone on the telephony, we are there. So I think that's the part that changes us to some of our competitors, in that we want to be where the client is comfortable at.
Very interesting indeed. Of course, an interesting one for African Bank, and one we're consistently asking, are we still on track to list in 2025?
We're putting a lot of work into that listing for 2025. I think what we're looking at it is we've done our staff scheme where we've got effectively all our staff members are becoming shareholders, getting an equal percentage, irrespective of seniority, gender, race, long-term service that you've done. Everyone shares equally in that 10%. I think that's really exciting. And then we have a plan of doing significant other transactions as well in terms of moving that shareholding from the current shareholders of the bank. All that we're working diligently on to get that done. And definitely the final piece is that compelling listing as well. So we're working hard to get that done in the medium term as well.
Well, Anbann, we're certainly looking forward to it. Thank you for your time today, and we should catch up in the next few months. So that was African Bank CFO Anbann Chetti.